Testing, testing. Hey traders, hope you guys had a pretty good weekend. Sunday night, wanted to get out a little bit of a webinar, go over some thoughts as usual, as well as just going over some charts. I'm including a chart from a couple weeks ago that explains some of this stuff into a little more detail, just for the newer traders in the room, just so that have a better understanding or feel more confident when they're entering and exit a trade, especially if I'm at lunch, or if you're a trader that's back into the room, when the webinars used to be, or the library of the webinars used to be included. It'll kind of bring everyone hopefully up to speed. So again, I think the webinars are extremely important to your learning growth, shorten your learning curve, and get yourself to profitability. So first, I just wanted to point out, I know we're talking about the trade ideas and the scanners. I know during the day, most of you guys, after we do the opening morning watch list, we're all scanning, we're all looking for stocks, and I'm not going to push this. You guys want to try out these trade ideas? Just please try it out. Click on this button here, and you should be able to get a free trial. And then if you decide to stay, it's 15% off. Under Iconic 15 is your discount. I also have it listed under Join, and you go down to the bottom. Anyway, I guess I don't. So we'll have to fix that. Anyway, you'll notice the webinar package is here. The monthly is here. And there's always a webinar link to the Lightspeed webinar that I did with Luigi over at Lightspeed. So if you guys know of any serious, people that want to learn how to trade and are willing to learn, refer them to the website, refer them to watch that. If you have any questions, have them free, tell them just to give me a call, and we'll take it from there. But the trade idea scanners is what I use, and like I said, you can set it up for pretty much anything you want, and it works pretty well. So here's briefing.com. This changed a lot since I used to use this. It's actually a really good news service. They've added a lot to it, but like Briefing in Play Plus, it's like $3,300 a year. And you just don't need it. Just don't need it. So if you do have the delayed news, you want to try it out, great. But after looking at the pricing, I would definitely stay away from it. It's just not something that I feel you need, because I have the latest news that comes off my Squawk when I'm here, and scanner might be doable because the scanner is not that bad, and you do get the discount. But looking at Briefing, it's great because they're usually faster than my Squawk, but not by much, and I can't justify spending $300 a month on that anyway. That's it's just a waste of money, in my opinion. So I want to go over these charts a little more thorough than I usually do. Okay, just because I want everybody, and I know the older traders are gonna say yeah, let's get on with the show, and we did this already. But really, I think the group of guys in here we have right now, I'm extremely happy with. Everyone seems to be working together and helping each other out, which is great. Hopefully Jesse will get back soon. Will's going to be coming back soon. So, we just got a great bunch of guys, and I appreciate you guys helping each other out, especially, like I said, when I'm at lunch. And Luigi, it goes without saying, thanks for all you do and what you bring to the room. So I really want to get away from doing chart reviews all the time and start working on other things. but I need to make sure that everyone has the concept down of the chart reviews. Because if you don't, and pretty much everyone in here, with the exception of one person, has seen the webinar library, so you pretty much know the setups. Some of the traders are taking setups in stocks they really shouldn't be trading, and I'm not talking about like the Amazons or the Googles. I'm just talking about stocks that aren't in play and have no potential to make any big moves. You might make 30, 40 cents, but why? That's the whole thing. Is that really how you want to spend your day, scalping for 20, 30 cents? You need to look at the range of the stock. Okay? And if the range isn't there, don't waste your time playing it, because you're either going to get stuck in it, okay, or you're going to go through the day and maybe make 10, 20 cents and waste your whole day. So, I'm not saying, stay with my stocks throughout the whole day, even though that's pretty much, what I try and do, and I'll do my scans and I'll play the scans when they come up. But on my, after the open on my side computer, my little laptop, I have all the stocks that I have on the open. I still have open on the side, and what happens for me is I end up missing a lot of plays, which I have to stop that, because it's costing me money. And usually the calls that I make are friggin' awesome. I mean, they're just great calls, and they produce points. And I have to take as many of these calls as I can. And if I don't want to be in 5 positions at one time, then that's something that I need to personally work on, because I can't keep continuously leaving money on the table. I can't do it anymore. So even if it's 3, 4, 500 shares, I'm going to try and take every call that I make and just see what my P&L is at the end of the day. And I'll probably be kicking myself in the ass for not doing this, sooner. But it is what it is. And, fall's here. It should be game time from here on out. We should have a great week. And nothing is going to matter, though, unless we take the proper setups with the proper stocks. Okay? So I'm going to start with Ulta. Okay? Day 1, day 2. All my charts are 2-day, 2-minute. Okay? Double top, came down, tested VWAP, double bottom, and it came straight up. Okay? So you got to double top, be short it. What's your stop? Your stop is going to be a break above VWAP. Okay? I'm sorry, a break above the upper band. We all know that by now, or everyone should know that by now. You say, well, it's not a double top because it took out the high. And I told you what they're doing. They're taking out the high by a little bit to trap the longs, right? Fake the breakouts, and then they bring it back down. Okay? So for those of you who would have taken it short and got out, at the 200, looking at like that was your target, okay, you need to start looking. Okay, look to the left. You're going to see some kind of resistance right here. Okay, or I'm sorry, support right here. Okay, look to the left. You always got to look to the left. I don't care if you're 20 minutes into the trade. You always got to look to the left to see what's coming up. Looking to the left is going to predict the future. Okay, just understand it that way. By looking to the left, it's going to tell you where the stock should go or should bounce from. Okay, so you look to the left. Okay, great. You got triple bottom here, right on VWAP, previous day close. Okay, so yeah, right now you got your finger on the trigger, ready to cover. Okay, you got the 920 cross. What happens? Got the 920 cross, the stock breaks the low. Okay, comes back, tests previous day close, it fades, comes up, puts in a lower high, comes down, tests it again. You can say, yeah, it's a double bottom, but it's not really a double bottom, because on this jump, it puts in a lower high. So if you took this double bottom, you would have gotten out right here, because it is a lower high. Okay, it's these little things that are tells. It's going to tell you which way the stock is going. And what happened? The stock faded all the way down to a lower deviation band. Okay? And then what happened? Straight down. Look at that volume. That's exhaustion right there. The move's done. Okay? You got the 9 starting to curl up. You could have taken this long. This would have been a triple top. You could have shorted it if you wanted to. Okay? But this was the play. Okay? And like I said on Friday, you never know what stocks are going to pay you $1 and what stocks are going to pay you $4. Okay? That's why you can't get out of a stock just because you're green. You can't do it. You need to let the stocks pay you and let them work for you. Okay? And I do this a lot as well. Okay? If I'm up a point, sometimes I'll just take it to put money in the bank so I can be a little bit more aggressive. And then by banking that point, the thing will move 3 more, 4 more points on me. And that's not the right way to trade. Bottom line. You need to let the stocks tell you when to get out. So you take this short, and if you get out here, big mistake. Because you had no reason to get out here. Kept on riding the 9, tested, got sold off, little consolidation, double bottom look, but no follow through on volume. Still didn't close above the 20, and then you came all the way down. This was the end of the move because of the volume. 920 cross, it went up. Okay, and then the next day we got up. I don't know if this was earnings or what happened, but the biggest thing here was the short. Okay, you got the upper deviation band. Touched it, came right down through VWAP. As soon as this happened, this was the short at the open. Came down, tested VWAP, failed. If you didn't take the short there, you take the short here at the failure of VWAP. And look at this thing. It goes from, let's say, 251 straight down at the time to 247.45. Took the 9 train all the way down. Never gave you a reason to get out of this trade. Never. So you should not be getting out of a trade because you made 10, 30 cents. 10, 20, 30 cents, whatever. You get out of a trade because the trade is not working in your favor anymore. That's the only reason why you get out of a trade. Okay? That's it, period. And if you're not trading stocks that have a big intraday range, you're not trading the right stocks. Okay? So here's another Alta. This one was earnings, as you can see. Okay? After hours came out, sold off, came right back up. Okay? So then next morning, actually they had a conference call at 5 o'clock. So here's, after hours. Okay? It's kind of holding this whole area. Okay? So what happens at the open? It opened right at, I'm going to call this, right at the 200, even though it was a little bit above. You got the upper deviation right there. Fast candle down. Okay? So yes, as soon as this level here breaks, you take it short. Every time it tested VWAP, it failed. You either add, or you just let it ride. The first target would have been this low. This was the after hour low. You can see, if you come across, that acted as your trend line support. But what happened? It held there for 1, 2, 3 candles, never broke VWAP. It broke it and kept on coming down. Came back up, tested the 9, and came back down. At this 9 test, 5 points, it came right back down to 250. This was a sick-ass trade, okay? This was like a 14-point trade, okay? That's why we trade the stocks we trade, okay? 1,000 shares, it's $14,000. 100 shares, it's $1,400, okay? Why bother with the $2, $3, $4 stocks trying to make 50 cents? It's just not worth it if you know how to trade the method. And the method is simple once you grasp it. And some of you are doing phenomenal, and some of you, are still struggling. And I don't think you're struggling grasping the method entirely. That might be part of it. Might be, trading the wrong stocks. But I think most of it is the emotional side. And, I did the last 2 or 3 webinars on the emotional side. I think it's time to get back to the chart reviews because, yes, you do need to learn how to start reading level 2. Yes, you do need, to figure out what kind of open books your brokerage firms offer. Okay, because it is important. Luigi right now is being kind enough to share his information with us. He should not be doing that, but he's doing it. And it's a huge help. It's a huge help. But, you guys really should learn how to, you should subscribe to get the open book and learn how to read the open book because it helps out tremendously. Okay, here's Herbalife. Okay, huge gap down. Huge gap down. Okay, so one, double bottom. Okay, you take this double bottom. Why? Because your risk is nothing. You got the lower deviation band right there. You hope for a pop. Look the MACD flip as well. Okay, you got a little bit of green volume. You look for the pop up to the upper deviation band. Herbalife usually goes band to band. Okay, and it opens up right at the upper deviation band. Doesn't breach it at all. Little wick saying it's being sold off into. You take it short. Where does it go? Right to the lower deviation band. Okay, what do you do at the lower deviation band? Now you got a triple bottom. What do you do? It's holding. It's holding. It's holding. You got the MACD histo flip. Yes, it's below the 9. It's below the 20. But your risk is 22 cents in reward for, say, $1.20. 57, 58. I'm sorry, $2. Okay, so you take this triple bottom. You cover here on your short, you ride it up, and you sell at the upper deviation. Make two quick points. Okay, just by knowing the stocks and by knowing where to enter and where to get out. These bands, to me, are one of the best things that I've ever traded with. On top of everything else that I have going on in my head, these bands tell me where the probabilities are and which ones really I should take and which ones I shouldn't take. This is Rackspace, okay? I put this one up here for a specific reason. I thought I had the daily and the weekly of this one, but I don't right now. But I want you to see what can happen, okay? This is why you got to be careful with the ads, and why I don't want a lot of you guys doing it yet. Came up, make a nice, single top here, okay? You got a nice doji, then you got a bar that sold off. Came down, consolidating. Everybody knows the longer the consolidation, the bigger the move. That's just the way it goes. Very little action here with the MACD histo. Very little volume between this time. And all of a sudden, probably around 2 o'clock, I can't even see what time that is, 1 o'clock, 2 o'clock, you get a little pop-up, right? Pop-up's coming with volume. So it's testing the upper band. Okay? So look at this red volume. Red volume. What do you think is happening? People start shorting based on a double top and the upper deviation reject. But what happens? The stock continues to rise. As soon as you see this, you get the hell out. You cut your losses and you let it go. Okay? And this volume bar right here was one sign with the MACD histo flip here, the one sign that this stock was going to go. So on top of this being bought, it's a huge short squeeze as well. That brought it all the way up. Okay? So on the upper and lower deviation band, plus you got to notice this 20. You got a rising 20, you got a rising VWAP, All that's very, very important. All that's very important. As the deviations, the upper and the lower deviations, I want to see them as flat as possible. I don't like the deviation bands curling up. I will not take the short. If the lower deviation band is curling down, I will not take the long. I want these things flat. That's when they work the best. Okay, so this has the consolidation period, long consolidation period, volume, double top, trap. They took it up. And this is what you got to be careful of. Because this is when you can add, it's just going to come down, it's going to come down. No, it's not. It may come down next day. We'll just call it a day, let it go, take your losses, and move on. Find another stock. For most of you. Okay? For most of you. Again, this doesn't apply to everybody. This is for the newer guys in the circle. So here we have MNK. I still love trading this stock. This stock can move. And when it moves with friggin', it's just fierce, man. I love trading the stock to the downside. Everyone's saying this is the next VRX. So, who knows? Do I care? No, I don't care. The only thing I care about is what's going on while I am trading it. That's it. Okay? So right here, you got the 920 cross. Okay? It breaks the lower deviation band. Breaks the 200. And look what happens. Look at this fade. This was just sick this day. Beautiful, beautiful fade. So you could have taken it short anywhere up here, okay, because it was holding VWAP all day long. It was holding VWAP. There's a very heavy short percentage on the float, okay? So what's your stop if you short up VWAP? Your stop's the high today, which is nothing right here, okay? You need to anticipate these moves, okay? I'm not saying to go in full size, but you could have started in your shorts at this double top right here. Okay, but as soon as this broke, you're in. As soon as this broke, you could have added. And then it's just off to the races. All the way down. All the way down. Then you got huge volume candle coming in. Red volume, green MACD. Bottom's in right now. Closes out the day. Okay, so then here we go again next day. Beautiful freaking setup. Again, yeah, you could have shorted here, double top, and wait for it to break. Okay, but here you got the double bottom. But guess what? You absolutely shit for volume. No volume here whatsoever. No MACD here, nothing. You got a declining 20. You have a 920 cross that already happened with the 50. And it's going to break the red to green, or green to red, and it's going to snap. As soon as this little saucer right here, I call them saucers. All right? That's what they are. As soon as these happen when they're around VWAP or moving averages, okay, and most of the candles are red, you know it's going to snap. So you got to get ready and get your order in and get in this short around here. As soon as this got rejected, you get in short, anticipating the VWAP break. Okay, the reason why I'm saying you can get in early here because your stop is minimal. There's very little space between here and VWAP. Okay, if the stock was up here, in this area, I would never say anticipate a move down because all of your supports are down here. Your resistance lines are all down here. The closer you are to resistance, it's okay to anticipate. Just start with starter size. If you normally trade 1,000 shares, start with 300. Just start into the position and get ready for that move. Okay? The same goes for longs. I don't do a lot of webinars on longs. I'm probably way overdue for a webinar on long. I think I did one of them. But really, guys, all you need to do is just do the exact thing. Just reverse the capital method. Just reverse it. Instead of getting 920 cross down, get to 920 cross up. And what's cool about TOS, if you put a minus sign in front of the symbol, it'll reverse it. And you can trade it like a long. So check that out. I mean, it'll look like a long, it'll still be a short, but if you're so used to trading longs and you're familiar with the long setups, put a minus sign in front of the stock symbol, and it'll look like it's going up, but in essence, it's going down. It's actually a pretty cool feature. I don't like it because it confuses the hell out of me because I have so many stuff that I'm watching. But for those that are used to taking longs and don't short a lot, try it because it does work. This is work. Work para. I don't know what happened this day. But on these paras, you guys know by now, I love playing them, but they kill me. Okay? Because I know on a para I can make 2, 3, 4 points in a heartbeat. I also know on a para I'm throwing a dart against the wall, blindfolded, not really knowing, where and when this thing's going to reverse. You just have to use your best judgment, unless you pull up the daily and weekly, and there's obvious resistance or support at a certain level. Okay, so the way I play these now, and if they work out, great. If not, I'll just let them go because I've lost a ton of money playing paras and falling knives. More so falling knives than parabolics. I've lost. So this one, parabolic, came up. Okay, now what do? I wait for the initial para to stop. I'll let it come back to VWAP, which 9 out of 10 times it does, and that's where I'll buy. And it may not get the full retracement back up, but I'll get 75% of it, probably 8 times out of 10, and it's a hell of a lot safer trade because I know where the stock is going to possibly max out at, and it's where it maxed out at, the first para. So let the first para go, let it come back to VWAP, nibble at it, hopefully you get a second run right back up. Simple as that. That's the safe way of playing the paras. This was Lulu. Lulu's starting to be in play a little bit. This was a while back, but Lulu is, I don't think it's Wall Street Starling anymore. I think they're having problems. So I don't know what the board is looking to do, but they're definitely falling out of fashion. So this is just, again, a simple setup, which is what I want you guys to focus on, is the simplicity of our trades. Don't overanalyze shit, guys. Just make it simple and trade what you see. Okay? You simply have here a double top at the upper deviation. That's all you need. MACD flip, another confirmation. A little bit more volume, another confirmation. 920 cross, another confirmation. So as soon as it hits here, you take it short. Here, with this 920 cross right here, you could have taken it short here and then covered. Well, why are you going to cover there, Pete? Well, look over here, guys. This is why I'm covering there. Yesterday's high. That's why I'm covering. Well, what does that have to do with today? Because stocks trade in freaking patterns. There's support levels of resistance and support. And it's crowd psychology, basically. All I'm doing is following up for professional traders. So not only am I doing it, every other trader out there is doing it that knows how to freaking trade. Okay? So look to the left, boom, got rejected there. Of course I'm going to cover it here. If it breaks, I'll get back in and trade. Well, you also got the 200 here in the lower deviation band. So I'm happy with this quick little short. It's almost a point. Then you wait, it gets back up, puts in a double top, then you go short. Okay? You just let it tell you when to get out. Well, Pete, why don't you get out here like you did the first time? The more times it tests the previous day high, the more chances you have of it breaking. Just like Shay said on Friday, the third time is usually the big breakout. And he's absolutely right. This time it was the second time. Okay, could you have gotten shaken out, or would I have gotten out here? Yes, I would have. But you know what? I got out because it closed. But if you look where this bar was and this bar stopped, you got trend line. And this is what you guys got to start picking up on. You guys are shorting into trend line support and trend line resistance. Not everybody, probably half the room. Okay? You have to be able to pick up these trend lines. You can draw a trend line from here to here to here. Then you got one from here to here to here. You have to be able to see these trend lines. Okay, that's why this stopped right there. Is because of this invisible trend line that was right here. That's why you need to look to the left. So if I got shaken out, I would have got right back in when I saw that right there. And I would have got another 40, 50 cents out of the trade. Okay? So make sure you are not shorting or going long when you have a trend line support or resistance 20 cents away. Okay? And if you need to draw the lines, draw the lines. If you're in a stock and you want to know where, I'm going to call them TLR and TLS, trend line support and trend line resistance. You want me to draw the lines for you? I'll draw them for you. But you need to be able to visualize where these lines are. Because if you get rid of these silly little trades that you shouldn't be taking because you didn't notice, there's trend line support there or trend line resistance, your profitability rate and your success rate is just gonna grow, and your account's gonna grow. Okay, and you won't have nearly as many red trades, okay, that you have right now. Okay, this is Lulu again. Okay, this one, it opened up. Okay, do I play longs at the open? Rarely will I play along unless there's news out on the stock. Okay, this one, it came down, it tested the previous day low, and then it took off. Okay, so you want to look for a long setup. Here it is. Came down, it broke the previous day close. It held trend line support. It held the lower deviation. It got bought up. You can see the wick. It's going to be strong. It's above VWAP. Every candle come down, test. It's holding VWAP. You buy. Comes down, test, holding VWAP. You buy. Now here's where it gets nice for me because I'm a sell side biased guy. I like shorting stocks. So we got getting stuffed at 81.80. Right, we're getting stuffed. Then you got the 9 starting to curl. Okay, I would have started in this short as soon as it breaks the 9. Comes down, tests VWAP. Okay, good. I'm in the money so far. It'll come back up. Let's see where it goes. Let's let it test the 920. Got the 920 cross. Guess what? It holds the 20. And on top of that, it puts in a lower high. This high is lower than that high. What does that tell you? It's losing its momentum. It's a weak stock. It's going down. So where's my target? My target is going to be a break of VWAP down to the 200. Okay, that's what my target is. But you say, yeah, but it held VWAP here. Why is it going to hold it again? Because you have different factors. You have a strong MACD. You have volume. You got the 920 cross now. Okay, you got the lower high. You have more confirmations going for you. That's why. And it came down. I think this is the 50 right here. It looks like the 50. It held the 50, and then it went right back up. So this is a great start for a short. And then if you want to add to it here, great. Me, I would have gone all in here, let it test the 20, and then covered when it got down to the 50. Or when, I should say, it held the 50. And it proves to me that it was going to hold the 50. Okay? This is SIG. Love trading the stock when it's in play. Earnings, conference call. This thing just dropped like a rock. Okay? This stock SIG and Ultra like Wall Street darlings as well. Came down, consolidate, conference call. Get the little pop into the conference call. Of course, the CEO or CFO is telling everyone what they want to hear. Oh, bad quarter, but we're raising the guidance. We're going to look good next quarter. A whole bunch of crap. No one really cares. They know it's fluff. So you get a little pop in the stock price. Comes down, tests a 9, it holds, comes up. But where does it come up to? It puts in lower highs. And you got a declining upper deviation. So where do you think the stock is headed? Lower highs. You got to look at the lower highs, the higher lows, the red, the greens. All that are little tells. Okay? Yeah, but what about this pop right here? Okay, what about it? This is where you say, you know what? Let it pop. It's going to pop up to a double top. I'm just going to add to my position because it held here. You got trend line resistance right here. Draw the trend line. There's 0.2. There's 0.3. This baby is going downtown. You add to your position here and take the short. Okay? You got the volume. You got the MACD. Okay? You had everything going for you on this trade. Okay? It was a beautiful, beautiful setup. And I wouldn't say, okay, well, just let this go, this little big pop here, unless this upper deviation was here, and I had confirmation here, and I had confirmation here. Okay? So this was a safe setup on this. And it's actually better that it did pop up because you could double your size and double your profits. This is Teva. With this one, I believe news came out that they lost one of their patents. Okay? So it came out, big drop, right? Big drop. Held the lower deviation line. Where did it go to? What's this little white squiggly line? Okay, it's VWAP. What do? I let the first falling knife go. Goes back to VWAP. That's where I reshort it. Where's my target? My target would be here. This one happened to go a little further down, but I would have covered at the lower deviation band. Okay, because anything past the first falling knife low is getting extremely risky. And you can see how oversold it was down here with the RSI. Okay, so I would have got out at the lower deviation band or at this low. If it keeps on going, I'll get back in. But what happens? Volume starts to decrease. You got the MACD histo flip, and then it bounces right back up. This is a classic textbook setup. Okay? Falling knife, rebound to VWAP, reshort, cover at the low, look for the exhaustion candles, another confirmation, MACD flip, another confirmation, cover. You want to take the long? Take the long. You could have rode this thing all the way back up. Know this pattern. Burn it in your head. Okay? And it's saying just flip it over for the parabolics. Because that's how you trade them. And I'm telling you that after losing my ass trading them. Now I know how to trade them. I just got to control my size. REGN. This is Luigi's nice favorite stock when it's in play. This, I don't even, the look of this chart doesn't even tell me like it was in play this day. Okay? But we took it and we banked on this one. Why? Why'd you take it? Well, you got double top here, came down, retest, put in 2 lower highs. Not even close to these highs. So you know it's weak. It came down, it's hugging the 200. Just laying there. Okay, what happens here? The 9's starting to curl. It breaks the lower deviation band. Okay? The 9 is curling, the 20 is crossed. You take this short, and it just fades away. So if you got in, really at 421, I'll give you 420 for a little bit of slippage. Take it short at the time of this picture, 412.54. That's 7.5 points in like 12 minutes, just on a perfect fade. Never gave you a reason to get out, ever. So when a stock is working for you, let it work. You, like I said, you'll never know which ones are going to pay you dollars or which ones are going to pay you cents or which ones are going to take some money from your piggy bank. You don't know. But the one thing you can control is how much money they take from your piggy bank. INSEE, another beautiful stock. Okay, came down, opened up, spiked up. Doji, it's one top. You could have shorted it there, covered a VWAP. Why cover a VWAP? Look to the left. Okay, comes back up. Boom, double top. What do? You short. Okay, but now you got the 920 cross, and it's just hanging on VWAP. Okay, there is no attempt to make a higher high. It's just getting stuffed below the 9. You still stay short. Comes down to the lower band. Okay, comes up, holds a 20, comes down to the lower band. So you got 1, 2, 3, 4 times at the lower band. Okay, you could have covered, okay, which is what I did, and taken this triple bottom long to VWAP. I did not do that. I waited for the short to set up again. You got one top, okay, came down here, stopped, look to the left, higher low, double top, 920 cross. That's where I got back in, and just rides down. Okay, you really could have shorted here to double top, and as long as it doesn't take out, the previous high, you could just sat in this thing all day. But I can't trade that way. I don't have the patience to be in the stock all day, unless it's like seriously working in my favor. This is Acacia. The stock has been trading between 111 and 104 for a while. And I'm trying to think the reason why I have this up is probably because of this double top here. It opened up, tested the upper deviation band. Okay, could have taken a short right there. Why? Where's your stop? The stop is right here. Okay, it probably would have been a buck away. But you have the upper deviation band above you. You have the previous day close right there, and you have the declining 200. So the odds in your favor to take this short. Okay, comes up, test VWAP. Okay, puts in a double top right there. You could have shorted it again for a couple points. Okay, I'm saying it's a couple points because you got 103 and you got 105.50 right here. So you got a couple points in this channel. But now look, you got the MACD histo flip, huge green histogram on the MACD, right? Off the lower band. You take it long, 920 cross. It just rides the 9 all the way up. Then what happens? This is where the important thing is, guys. This is where you need to lay it all on the line. Okay, this is where you go big. You got a declining 20. You got 1, 2, 3, 4, 5 tops. Okay, just look to the left. You got all these points of resistance, and now you got a declining 20 pushing this sucker down. This is where your short is. You take it short down to the lower deviation band. You had the volume, you got the declining 200, you got the 920 cross, you got the 5, I don't even know what you call quadruple, I don't even know what the hell 5 top is called. Can't come to me right now, but whatever. You just had so many confirmations that this was the area to short. And that's what everyone did. That's what everyone did. Look at the volume increase. Look at the MACD. That was the short. Where's your stop? Your stop is above the 200, which you didn't even get close to. All right. So making 2-3 points on Acacia on a daily basis is relatively easy. I used to hate trading the stock. Now I love it because I know how it plays now. All right, a few more, and we'll see where we're at. MNK, I think I covered this one already. Well, I don't think I covered this particular chart. Anyway, in this one, guys, it's the same thing. Yeah, I think it was the same chart. Double top, take it short, consolidation, and just play the fade. As soon as you see this fade, this tells you, okay, it's getting ready, it's going. Then you look for more confirmation. You got the 920 cross, you got the 200 break, you got the lower band break, and it's just perfectly fading down. Perfectly. I know a lot of guys in here would have probably shorted it, say at 85, and covered at 84 or 26. Oh, well, the 200 was there. And look to the left. You got, you got previous support right there. So what? It didn't break the 9. That's more important than anything. As long as it's holding the 9, you're golden. Do not sell and do not cover. This was a beautiful, beautiful 4-point trade. BMRN, another one, guys. This is basically off of a simple double top right by the upper deviation. Okay? You need to pick up these patterns. They could not be more simple for you. Double top, 920 cross, and just short it and let it go. It took the 9 all the way down again. No reason to get out. Okay, just say, I'm going to give you 101. I'll give you a point slippage. 101 down to 96.73 at the time I took this picture. This is a technically sound, A+ setup, tradable fade. And these are the ones that we try and catch because they pay us in points. And if I only get 1 or 2 of these a day, or 1 of these a day, and you got these other bullshit chat rooms, calling out, 100, 20-cent plays a day, I'll take my trades any day over theirs. Any day. Because these are stress-free. Stress-free trades. They're not overcrowded. There's no amateurs trading the stocks. They're predictable. You can read the books. You can read the level 2. You can read the time and sales. There's just no manipulation. It is what it is. It's simplicity. There's another one I used to trade a lot, AGN. Okay, opened up. It's holding the lower deviation, but look at the lower deviation band. It's declining. Then you got the 920 cross. I mean, look at this. Where do you think this is going? It's going nowhere but down. Okay, you got a little bounce here. Tested the 9 and tested the 20. It didn't close above the 20. No reason to get out. What happens? You get your second leg down. Just a beautiful, beautiful trade. And just by looking from here over here, you'll be able to anticipate. I was going to say predict, but no. You can anticipate these big moves happening, especially with these big boy stocks. Here's another INSEE. This one should be different than the last one. Just off a beautiful double top, lower high double top. That's all it is. Huge run up in the morning. Huge. Okay, and this again has a very large short percentage in the float. So this thing goes sky high in the morning. Do you really think all this volume that it took to get this stock that high is going to last all day long? Absolutely not. So now once it peaks out with this exhaustion, okay, it comes down, it puts in a little level of support here, but it makes a lower high. That's the important thing. Double top, lower high, 920 cross, short it. Okay, what's that VWAP? Good. Making lower highs, lower highs, lower highs. Oh, a little fakey right there. There's a little fake out from Mr. Market Maker. Okay, Mr. Market Maker, thank you. Have a good day. You let it go because it's bullshit fake out. Look where it stopped. Look to the left. There's nothing there. That's where it stopped last time. You don't worry about this. You let it go. Came back up, tested VWAP again. The aggressive traders in the room, this is where you add to your short. You let it go, comes back up, tested 20, did not break it, more sell-off. This is another classic pattern that you guys need to know. So it is, it's just patterns, guys. And execution. Don't even worry about that one. Not gonna worry about that one. ABCO. This one, bad earnings. Really bad earnings. Okay. I think I called this one actually. I think this one's gonna go to 26 or something after all this. And it actually did. It put it in low, double bottom, both wicks got bought up, okay, off the lower deviation band. Okay. So you take some long, anticipating this move back up. Okay, what's your stop? Your stop's the low of the day. Okay, so as soon as it crosses a VWAP, and you got the 920 cross, you take this thing long. Because when stocks drop this much, I tell you, they usually retrace. Okay, and then it gets up here to this trend line. Okay, so what's really going to happen up here? You got the 50 coming down right there, declining 50. It hits the 50, you got the 920 cross, and then you short it, and then it comes back down. Okay, sounds simple. It is simple. You just have to have the confidence and the know-how of what to look for in your trades. Okay, and if you're wrong, or if the setup doesn't work out, just cut your losses. Sherwin-Williams, one stock I love to trade when it's in play. When it's in play, you'll see volume. Okay, wasn't in play here, but you see it here. It's in play. Came up, double top, shorted the VWAP. Okay, could have went long off of VWAP. 920 cross, taking it long. Rising 50, rising VWAP, rising 200. Beautiful. Then you get a little para action here. This is parabolic for this stock. Okay, the stock doesn't move. This doesn't really move like this. And what happens? You got one top. Then you got a lower high, double top, under the upper deviation band. You short this. This is a short signal. Look at the volume. Died up. There's nothing there to sustain this price movement. Short it. It comes down. Test the 50. Test the 9. It fails the 9. Back down to VWAP. And the rising 200, which is where I would have covered. Okay, again, it's pattern recognition, lower high recognition, trend line recognition, and all confirmations. Volume, moving average crosses, and not getting trapped by market makers. VRX, haven't traded this stock in a long time. It really has not been in play the way I like it to be in play. But I just wanted to show you how this works. 1 day, 2 day. Okay? Day before, high day, shorted. Sell it down. Look at this. Where'd this bitch stop? Sorry, where'd this stock stop? Right there. I'd probably say about 20 cents maybe off. So if it sold off here, day before, upper deviation band, what's it going to do here? Same thing, sell off. Sold off. Lower high, double top. What do? You short again. It's putting in lower highs, lower highs, lower highs. It's not even testing this high right here. As long as this high stays intact, you're still short. And then she finally just gives it up. Finally just breaks. Okay, and here, I like this. Here's another saucer bottom, guys. I like these saucer bottoms and I like these saucer tops. Okay, double bottom. Came down, saucer bottom, call it a cup and handle reverse, whatever the hell you want to call it. It works. You could have taken this 920, 50 cross for a long to the upper deviation band. Okay. And you could have shorted it. I probably wouldn't have up here because there wasn't much to go on besides the upper deviation band. But it was a nice predictable move up because you have this trend line support right here. Okay, so this break you could have anticipated. Move down to Lower deviation, look to the left. Look where it stopped the day before. Where do you think it's going to stop today? Same place. So what do? You take a little nibble. You take some long. Why? Because it held here yesterday. Why wouldn't it hold here today? Right? That's what you think. Candle by candle, you got to do your analysis. You take this long all the way up, band to band. Okay, consolidation. It held the previous day close, tested the 200, got bought right back up, 920 cross, nice little pair action up until the upper deviation band. Look to the left, you see it got rejected there yesterday, you take it short, could because of that, you got a nice little, I don't know, 30, 40, 50 cents here, came up, you got a nice wick, got sold off into, sign of weakness, double top, lower high, you stay short, you add to your short, 920 cross, take it all the way down. It's that easy. It's just executing it, guys, and letting your money run. That's all it is, letting your profits run. So study those charts. I'm going to send out two. Watch them both, please, so you get familiar with both of them. And these patterns get burnt into your memory, so you'll see them and recognize them right away. All right, I'm really looking forward to a great week. Appreciate you taking the time on Sunday to watch this, and I'll talk to you guys in the morning. Thank you.